Hello everyone, Jesse Webb, Traders Pro. Market conditions remaining bearish in this bull market. Continue pretty nasty day again yesterday, but we're definitely now on the extreme ends of momentum and on breadth. Breadth could get a little bit more extreme, but momentum at this negative 200 level. It's as low as typically it can go. Sometimes it'll go down to negative 250 as well. But let's look at a couple of support locations. So we're seeing breadth also extreme. We're seeing sentiment, which is still up in that upper buy range. It's starting to slide though, which could mean some additional fear coming into the market. If we do get some kind of panic capitulation on this, we may see that number also move. We're seeing the buy-sell ratio also now widening back out again to these locations. Again, these are unsustainable areas, at least for the short term. We'll probably start to see some areas of support and bounce right here on the market. We're seeing the sentiment now dipping down to 9. This last one here we talked about, the last few support areas. This one was 11. This is 13. This was 12, so making new lows on this sentiment down inside of that reversal location. We'll keep an eye on that. We talked about bonds also. That's dropped right off the table with TLT, and we'll take a look at that right now. In fact, if we take a look at the sectors, we're just seeing really tough markets right now, all in downtrends. We saw two of the three that were in hold slip back down into this sell or this downtrend. So certainly nothing to get super excited about at these levels. That being said, on S&P 500, we've got that three-part counter trend that I've mentioned, where we have this kind of a formation. We have a swing high and a swing low. This is on that six-month time frame, right about that 50% area, and in terms of momentum, all the way to that downside. So be watching for a day or two of support. It doesn't have to be massive to the upside, just anything to show any kind of stability right here would be interesting. We do have a pretty significant range though to the next support area. We've now broken down to this area, and really the next support area is around that 416, which is not that far away now, maybe a percent or two. 2.5% maybe. So we could see the markets go down to that area. If we did see it slide, actually, I would prefer to see that just to kind of wash out the remaining range inside this little gap that's right here. If we could just close that and finish all the way back down to support, that's a major support area. The negative side of that is that we, on the 2-year time frame on S&P 500, we've also really sliced right through a pretty significant support area right across here like that. You can see that bar now dipping down below that, where we had all this activity here and here and here and here. That's a significant zone that the market couldn't hold up. And so now you can see that real big one is sitting right down there around that 416, 414 range on S&P 500. So we'll watch to see if we get a rally that pulls us off of this extreme low back up again. But now we're going to be dealing with this overhead resistance now. All of this line, if we can't hold that, that's going to be overhead resistance, and that next low could start to come into play. The indexes, we're also seeing, buy-sell ratio is pretty low now, 1310. That's also kind of an unsustainable location. So that also, we could see some momentum again, capitulation, some fear selling. Those can happen at these areas as well. So certainly some caution out there, and again, being cautious into buying back into this uptrend until we see a day or two at least of support. There are some stocks that are still moving. Transocean, RIG on the new buy list. If we go out here, oil and medical are continuing to work right here. We have a stock in this upper range and in the momentum zone. Not a real good solid confirmation bar, but nonetheless it's finding support here and starting to move this direction, showing up in the top of that list, and has had a nice uptrend here over the last 6-8 months, as all oil stocks have. Medical stock, MDXG rather, the upper range, the buy zone right there, one to be watching for. A buyout stock, skip through that. AMRX, this is a nice looking pattern. I actually really like this one of the top three. This one looks the best because it's just smooth like that, really nice, smooth, not a lot of volatility in terms of ups and downs, just a nice uptrend. Having some gaps here, but it trends nicely, and now it's in this upper range of the trend rally, counter trending back down a little bit and getting a little bit of a confirmation bar right there. So interesting. That's a nice looking pattern, and current market conditions, seeing some schooling stocks. TAL, this is also a nice looking pattern. It's real solid confirmation bar on that one. After some uptrend, you're continually getting these lower higher lows. Rather, it's trending higher, and now it's breaking out of that area. TAL, also an interesting stock to consider for today. That'll do it for today's update. Everyone have a fantastic day today.